Here's the thing. Most people look at $15 a day and they see lunch money, maybe a coffee and a sandwich, maybe a streaming subscription they forgot about. But what if I told you that same $15, that exact amount, could buy back your freedom? Not someday, not at 65, now. I've been building towards something for years, and the number that changed everything for me wasn't $1 million. It wasn't 500,000, it was 15. $15 a day. Because $15 a day is something almost anyone can find. It's not a lifestyle change, it's a redirect. And that redirect, then when aimed at the right assets, becomes something most people never see coming. The 20-year reality check, let's do the math first, because the math is what woke me up. $15 a day, 5 days a week, invested consistently at a 15% yearly return, which high-yield income funds have historically delivered, that comes to $485,000 in 20 years. $485,000 from $15 a day. And here's the part that gets people. At that portfolio size, you're generating over $6,000 a month in passive income. That's not a side hustle. That's not a bonus. That's freedom. Deposit it into your account, whether you're working or not. The 40-year trap. But here's what nobody tells you. The system doesn't want you to see this. We've been brainwashed, and I use that word carefully, to save, hoard, and wait 40 years. Save 25 times your salary. Stick it in a 401k. Wait until 65. Then maybe you can relax. If your plan takes 40 years, you don't have a plan. You have a hope. The system was built this way on purpose. The 40-year plan keeps you employed. It keeps you consuming. It keeps the economy moving, and it keeps you from ever asking the one question that changes everything. What if there's a faster way? And here's the thing most people don't realize. Saving more isn't what speeds up freedom. Redirecting it is. That's the shift. That single idea. It changed everything for me. What age do you want to retire? Drop a number in the comments. I read every single one, and I want to see what you're actually aiming for. The Freedom Acceleration Formula. So here's what this video is actually about. 3 things. First, we're moving from total net worth obsession to monthly cash flow reality. Because net worth is a number on a screen. Cash flow is what pays your bills. Cash flow is what buys your time back. Second, I'm going to show you how $15 a day feeds what I call the dividend snowball method, and why it compounds into something unstoppable. And third, why this cuts decades off your timeline. Starting today. Not next year, today. Live now, not later. Waiting until 65 is a trap that steals your best years. I want the 2-hour lunch on a Tuesday. I want to travel when my kids are young enough to remember it. I want to be present for my family now, not when I'm 70 with bad knees and a body that's done. So I started looking for assets that pay me while I build. Dividend income funds that deposit money into my account every single month, whether I'm working or not, whether the market is up or down. Pay me now, so I can breathe while I build. That's the philosophy, and it works. Quick disclaimer. I'm not a financial advisor. I'm not selling courses on how to get rich. I'm just someone who figured this out early and feels obligated to share it. Everything here is my own journey. Your situation is different. Your risk tolerance is different. Your timeline is different. Do your own research, but at least understand what's possible. Because most people don't even know this path exists. The snowball method, okay? Here's where it gets interesting. $15 a day, 5 days a week. That's $5,475 a year going into high-yield dividend income funds. At a 13% yield, and that's conservative for the funds I use, that's $711 in year 1 dividends. $700 from $15 a day. Now here's the magic part. You don't spend that $700. You reinvest it. Those dividends buy more shares. Those shares pay more dividends, which buy more shares. Every single month, the cycle accelerates on its own. You don't have to do anything extra after you set it up. The snowball builds itself. That's why I call it the snowball method. Because once it starts rolling down that hill, it doesn't stop. It gets bigger. Year 1, you're making $700 in dividends. Year 2, it's more. Year 3, and even more. And the gap between what you put in and what comes out grows wider every single year. The math after 10 years. Let me show you what this actually looks like after 10 years. Real numbers. No rounding, no inflation adjustment, that conveniently makes the math look better. $15 a day. Reinvested dividends. 10% portfolio growth. Total amount you put in? $54,750. Portfolio value after 10 years? 95,000 plus. Annual dividend income at 13% yield? $12,350. That's $1,029 every single month. Forever. Over $1,000 a month. From $15 a day after 10 years. And here's what's crazy. The principal keeps growing. So next year, it's more. The year after that, even more. The snowball never stops. It just gets heavier. Most people will never see these numbers because nobody shows them. The financial industry has zero incentive to teach you this. Because a financially free person stops being a customer. Engine versus the bank. Now let's talk about where most people keep their money. The bank. A savings account pays you 0.5%, 0.5%. That's not growth, that's slow death. Because inflation runs at 2 to 3% a year. Your money is losing value every single day it sits there, quietly, without anyone telling you. The dividend engine, 12 to 13% yields, compounding monthly, growing forever, 0.5% versus 13%. That's not a small difference. That's the difference between your money dying quietly and your money building an empire. And here's something that sounds crazy, but it's true. The zero bank account lifestyle, keeping minimal cash in a bank and putting everything into income-producing assets, is actually safer than hoarding cash, because cash loses value every year to inflation. Income assets generate value every single month. Your money's either working or it's dying. There is no middle ground. Before we go further, if you value seeing how systems actually work, and you want information most people don't get until it's too late, subscribe. This channel exists to show you what's really happening. Not hype, just patterns. The secret, the 25% rule. Okay, this is the mechanism, the one thing that ties everything together, the single rule that makes this whole system work, regardless of your income level. I call it the 25% maintenance rule. Here's how it works. I keep my living expenses at 75% of my income, always, no matter what, no matter how much I make. The other 25%, that feeds the engine every single month without fail. 25%, that's it. That's the magic number. It doesn't matter if you make $50,000 a year or $200,000. 25% of whatever comes in goes straight to the dividend engine, automated. Set it and forget it. No willpower required after the initial setup. This rule does three things. It protects your capital. It keeps you aggressive on income generation. And it lets you sleep at night because you know the engine is being fed every single month. The good debt strategy. Now, here's where it gets controversial. Because most financial advisors will tell you debt is bad. All debt. Period. No exceptions. They're wrong. Or at least they're incomplete. Smart leverage isn't about buying cars and watches. It's about using other people's money to control income-producing assets faster. Here's how it works in practice. You borrow from your brokerage at around 6% margin rate. You use that borrowed money to buy dividend income funds yielding 13%. That's a 7% spread. Working for you every single month. While you sleep. Borrow at 6, earn at 13, keep the difference. That's not debt. That's an engine running on someone else's fuel. The key is understanding the difference between debt that costs you money and debt that makes you money. One destroys wealth, the other accelerates it, the strategy. So what am I actually buying? Here's the split I use. 60% goes into high-yield NASDAQ income funds. These are technology-focused funds that generate income through option strategies built on top of the biggest tech companies in the world. 12 to 25% yields depending on market conditions. The other 40% goes into Bitcoin income funds. Same concept, income-generating strategies built on top of cryptocurrency exposure. Higher volatility, higher potential yield. And here's why I do both. 60% risk on, 40% risk off. When tech surges, the 60% carries you. When markets pull back, the 40% in harder assets provides a floor. 12 to 25% yields. That's the range. And traditional advisors are too scared to even mention these funds exist because they don't fit the safe narrative the industry was built around. The portfolio trap, Let me expose something that most people never question. 90% of portfolios are designed to keep you working until 70. The traditional 4% withdrawal rule, created in 1994 using historical data from 1926 to 1976, is essentially a prison sentence dressed up as a retirement plan. That world, 1926 to 1976, doesn't exist anymore. The economy has changed, the markets have changed, the tools available to individual investors have changed completely, but the advice hasn't. Here's what they tell you: save up 25 times your salary, then withdraw 4% a year, and hope it lasts until you die. But here's the problem: by the time you hit that number, you're 65, you're exhausted, and you're withdrawing, which means your money is shrinking every year, getting smaller, until one day it runs out. We're not withdrawing, we're collecting income while the principal grows. That's the fundamental difference. That single shift in strategy buys you decades of freedom. The money never runs out. It keeps growing forever. What's your current salary? And what would your life look like if dividends covered it? Drop it in the comments. I want to see the actual numbers, what freedom actually looks like. Let me paint this picture for you, because freedom isn't what most people think it is. Freedom isn't lying on a beach doing nothing forever, and that gets boring after 2 weeks. Freedom is work becoming a choice, not a requirement. Your dividend engine covers your survival expenses, the basics: rent or mortgage, food, insurance, transportation, the essentials, covered every single month without you having to trade your time for it. Now, everything else, the passion project you've been putting off for 10 years, the business idea that keeps you up at night, the travel you keep saying maybe next year too, being present for your family without the stress of wondering if the paycheck is enough. That's yours, on your terms, on your timeline. This isn't retirement. This is freedom, while you're still young enough to enjoy it. The biggest mistake. Here's the number one thing holding people back. And it's not money, it's not income, it's not even discipline. It's the belief that you need to have more money before you start. I'll start when I have more money. I'll start when I'm more comfortable. I'll start next year when things settle down. Every year you delay costs you 2 to 3 years of freedom on the back end. That's not an opinion. That's a compound math doing its thing. The longer you wait, the steeper the climb becomes. The snowball you didn't start rolling last year would be twice the size by now. $15 a day is enough. You don't need to be wealthy to start. You need to start now, today, with whatever you have. The snowball builds itself from there. Starting your engine today, 3 steps. That's it. 3 steps and the engine starts working. Step 1. Redirect $15 a day from your current expenses into dividend income funds. Cut something. A subscription you don't use. Eating out 3 times a week instead of 5, a habit you formed without ever deciding to. Find $15. It exists somewhere in your budget. I guarantee it. Step 2. Apply the 25% rule. Automate your contributions. Pay the engine first, before the entertainment, before the upgrades, before the discretionary spending. The engine comes first, always. Step 3. Reinvest every single dividend. Every one. Don't touch it. Don't spend it. Let it buy more shares. Let the snowball accelerate on its own. This is where the magic happens. 3 steps, $15 a day. And the engine starts working immediately. The free guide. I put together a free guide. It's called 7 Retirement Myths Costing You 20 Extra Years. It breaks down the exact lies the system feeds you, the ones keeping you in the slow lane. Every single myth, exposed, with the math behind why they're wrong. Link is in the description. Grab it before you leave. No strings, no sales pitch, just the information most people don't get until it's too late. And if this strategy resonated with you, watch the next video. I show you the exact dividend funds I'm buying right now, the ones powering my engine, the ones I wish someone had shown me 10 years ago. Link in the description for the free guide. Join the Margin of Freedom community, see what others are building alongside you, and see that you're not alone in wanting out of the 40-year trap. Thanks for watching. Now go turn your $15 into freedom.